Hello guys, welcome back to the Brutal Investor channel. I hope you guys are having a fantastic day today. In this episode, we're going to cover a popular Canadian stock, which is also a real estate stock that provides people an opportunity to earn monthly distributions by holding the stock. And this stock is called the Riocan Real Estate Investment Trust, or the REI.UN.TO ticker symbol, right? So again, before we talk about the stock, I want to talk to you guys about WellSimple. WellSimple, if you guys don't already know, is one of the popular mobile apps that's kind of catching up in Canada. It's actually a very popular mobile app for people to basically buy, sell, and trade stocks as well as cryptocurrencies, and they have a whole host of options for people to use. Most people see WellSimple as a very good quality app for beginners to start investing in, because you basically need to just download an app on your mobile phone and you can fund your funds there and start trading right away, right? So that's basically how simple WellSimple is. And one of the best things about WellSimple is that they do not charge any commission for all Canadian stocks and trades, which means you basically have to pay no fee when you're buying and selling Canadian stocks and ETFs, right? But if you're trying to buy US stocks, you may have to pay a conversion fee, which is kind of like the only fee that you have to pay. But if you hold a premium account with WellSimple, you don't even have to pay that as well, right? So for some reason, I can't really open their website right now, but when you go to wellsimple.com, you can learn more about what kind of a platform they are and how fast they're growing, not only in Canada but also outside of Canada and the US as well, right? So if you want to basically start investing in a simplified app which provides you with a lot of transparent information and gives you an opportunity to test the waters with regards to investing, then you can use the link in the description to set up a WellSimple account right away. And by doing so, you're actually going to get up to $3,000 worth of funds deposited in your account as a welcome bonus. Again, it's up to $3,000. You could get somewhere between 100 to 200 or even more than that in funds for you to use to buy and sell stocks in your WellSimple account right away, right? And you only get that benefit by using the link in the description, because it's a referral offer which you can take advantage of, right? And by using the link in the description to setting up a WellSimple account, you're also supporting the Brutal Investor channel, for which I thank in advance. So going back to the Riocan website for the page, I'm basically using Yahoo Finance, Canadian version of Yahoo Finance, which is ca.finance.yahoo.com, and you can search for REI.UN.TO. You have to get the Canadian version of the stock. The TO basically stands for Toronto Stock Exchange, so you can only buy this from Toronto Stock Exchange as it's a Canadian stock. If you want to buy the US stock, you don't have to type the .to. But this video is going to cover everything when it comes to Canadian side of things, along with all the funds that is going to be referred into this video is going to be Canadian dollars, right? So for people who want to basically get an exposure to a really good Canadian REIT stock, then this is best stock for you, right? So before we talk about this, I just want to give you guys some background on why you need to choose a real estate investment trust stock compared to regular stocks, right? So if you see, the pandemic has clearly shown to us that housing prices have been going through the roof in an inflation environment where money has been printed like crazy. Housing prices go through the roof, and some of the hottest markets in the world has been Canada, United States, as well as Europe. Canada has seen extremely high growth in its real estate portfolios overall across the country, and every person who has owned a house right before the pandemic, they were able to sell their homes for a significant profit, because people were literally buying off properties left and right? So now that we are kind of like in the recession period right now, where interest rates are going up, it's still hard for people to buy a house in Canada, because previously the housing prices were extremely high, which kind of priced out a lot of people. Now, even though the housing prices are going down, they haven't gone down to a point where it still makes it affordable for people to buy houses. And another thing is that now that we are in the recession period, due to high inflation, interest rates, people are finding it very hard to borrow money in order to buy a home, right? So buying a home in Canada has been much more harder than ever before. And since Canada is a very hot market, this is the case, and economists have predicted that this will be the case for quite some time, right? So for people who can't really buy homes because of your income situation or family situation, or because of the fact that you're priced out for various reasons, Real Estate Investment Trust offers the best solution for you to hold some form of exposure within the real estate market. So REITs provide you with an option to buy a small fraction of the real estate portfolios, and while doing so, when you own even a single share of a REIT, you're entitled to get distributions which are paid on a monthly basis, pretty much for all the REITs, right? So these are the benefits that you are able to get by holding a REIT. You are basically gaining exposure to the housing prices while actually not being able to buy a house, like without even having to buy a house directly, right? So that's the benefit of REITs. And why am I bringing Riocan specifically? Riocan is known to be one of the most popular REIT stocks all across Canada. And to give you guys an overview, if you go to the profile section, you can basically see that it's a Canadian company based in Toronto. And if you scroll below, you can see that Riocan is one of the largest real estate investment trusts in Canada, which is obviously the case. And Riocan has been one of the leading names in the commercial and retail-focused real estate portfolios, where they own and manage and develop retail-focused, increasingly mixed-use properties located in prime, high-density, transit-oriented areas where Canadians want to shop, live, and work. Right. So obviously, if you're trying to buy a home, you're basically trying to rent a home, in this case, you need to basically rent a home where you can get all the basic amenities, which includes transit, accessibility, ease of finding shops, schools, social service areas, including police stations and fire departments. So all these are a mandatory requirement for people who are trying to rent places. So since Riocan has retail-focused properties in high-density areas, they are basically the main focuses of attraction for people who are trying to rent houses, right? So that's one of the main source of income for Riocan. That's pretty much the main source of income for Riocan, and that's how they're able to collect their rent and provide their distributions to their investors, right? So that's why Riocan is a very popular and one of the most popular noteworthy names in the Canadian market for REITs. So as of September 30th, 2020, our portfolio is comprised of 221 properties with an aggregate net leasable area of approximately 38.4 million square feet at Riocan's interest, including office, residential, rental, and 16 development properties. So basically, these are some of the numbers. As of September 30th, 2020, they have 221 properties in an aggregate format across several popular cities, which mainly includes Toronto, Montreal, and Vancouver. But they are basically expanding towards other provinces and other cities as well. And they have a net aggregate leasable area of approximately 38.4 million square feet, which is pretty crazy. And this space includes office areas, residential, rental, as well as 16 development properties. So clearly, they're a big name in the Canadian market, right? So for people who want to get exposure to Canadian REIT, this would probably be one of the best places. Obviously, Canada being one of the hottest real estate markets, people who invest in this stock will get not only some good distributions on a monthly basis, but they'll also get good capital gain appreciation in the next 5 to 10 years from now as well, right? So that's pretty good. So now that covers the overview of what this stock is all about. So going to the summary, if you see here, the stock is currently trading at $18.66 in Canadian as of Friday. And it kind of like the closing, it was kind of like 47 cent, had a decrease the past 24 hours, and which was about negative 2.46%, right? It's kind of like a small decline, but if you see the long-term charts, you will see that the stock has performed quite well so far, right? So we'll go through the numbers in a few seconds, but if you scroll further below, you can see the previous close was $19.13. The previous open was $18.83, all Canadian. So it seems like on Friday the stock did dip a little bit, it's not really useful for us to check these dips on a daily basis because we are long-term investors. So for people who are trading this stock on a daily basis, the daily close and open price would be much more relevant, right? So if you see, the days range has been $18.51 to $19. So clearly it's been trading in this range in the past 24 hours. The 52-week range has been $18.51 to $26.11. So clearly the stock has gone as high as $26.11, but now it's kind of like cooling down and in this nice buy opportunity ratio, right? If you see the volume, the trading volume in the past 24 hours has been $1.2 million, which is pretty good, and the average volume is $763,000. So clearly, the trading volume is increasing. Most people are starting to buy REIT stocks, especially with the main focus on retail-focused REIT stocks, and therefore Riocan is getting most of the trading volume from the REIT trades that's happening in Canada, right? The market cap of the stock is $5.767 billion. Beta has been 1.18, and the PE ratio is 9.98%, as well as EPS is 1.87. So these are all really good numbers, clearly showing that this stock has some really good fundamentals in place. And when it comes to the forward dividend and yield, the dividend is $1.02 for every share. It's just on an annual basis, and the dividend yield is a really good 5.47%. So clearly the stock is giving a really good distribution yield. Again, even though they say dividend yield, it's actually distributions and not dividends, so it's a big difference between this dividend and distribution. So for REITs, you only get distributions and not dividends, right? So it seems like the yield is quite high and pretty good. You get 5.47% on an annual basis, and now that you're basically able to buy this stock at a decent discount, you can actually keep buying more for a higher dividend yield, right? So the ex-dividend date is 28th of September. So for people who don't know, if you want to get your distribution for the next month, you basically need to buy the stock before 28th of September, right? So if you buy it before 28th of September, then you'll be able to earn a dividend the following month, right? So that's how it works. So 1 year target estimate is about $24.72. So clearly a lot of people are expecting this stock to go up. Currently it's at $18.66. It's expected to go up in the next year or so of about $24.72 at its price prediction for the next year, right? So clearly a lot of people are bullish on this stock, and you can learn more about the news and how the recession is affecting people, along with the fact that how you can actually gain exposure to a small piece of the REIT portfolios that Riocan is holding by buying and holding REIT stocks of Riocan, right? So now let's talk about what conversations people are having with regards to Riocan. So if you click the conversation section, this will tell you some of the reactions and some of the market sentiments of people and how they're reacting on the social media. So there's about 3,700 reactions to the stock. And if you see here, for example, Jay, who's one of the top reactions, he's mentioned that wouldn't be surprised to see this drop to near COVID levels over the coming months. That being said, long-term hold, so a great opportunity to buy while it's cheap. So obviously, people are bullish. So people are predicting a short-term correction for the stock. But as you can see from the whole sentence that Jay has suggested, that this is a great opportunity to buy it at a cheaper price. So people are obviously waiting for the stock to go down so that they can buy it at the cheap and hold it long term, right? And it's got 8 likes. Jay again mentioned that buy when it drops to $15 in the next few months. As interest rates rise, the stock will drop accordingly. So clearly, people are anticipating that this stock will go as low as $15 per stock. And due to the interest rate increase, this is the normal trend of the markets. When interest rates rises, the real estate stocks kind of suffer because they are directly affected by the interest rate fluctuations, and therefore people are anticipating to buy the stock at a good discounted price of $15 per stock, right? In that case, the dividend yield would be significantly higher because the lowest price point you buy, the more shares you can buy and the more distributions you'll be able to get the following month, right? And if you see it seems like a lot of people are using a single letter names as a profile names. If you see, I has suggested that fundamentals mean absolutely nothing right now. Bo across the board, maddening. So obviously he has a very or he or she has a very unique comment here. So Moo has mentioned here that if you are here for the dividends, this stock will not work now. The prime rate in the bank is 5.45%, and GIC is around 4%. The trend is more hike in the future, which will press the price. Also, higher rate will make refinance harder and more interest expenses on income statement. The cash flow from operation will significantly decrease in the future. That means you will have less dividends with dropping stock price, or what you get if you still hang with it. Sell now, sell immediately. So this person clearly is bearish on the stock, and they are basically using their own rationale when it comes to the interest rate hikes and comparing it with the GIC rates. Is basically stating that people need to sell the stock if you have it right now, right? So clearly overall there's a bit of positive and negative sentiments. Most of the sentiments right now is negative because people clearly are anticipating the stock to go down even further. Even when people are negative, they're basically stating that it's better to sell at this time and then buy it back once it's gone maybe to the $15 mark, right? So clearly a lot of people are slightly bearish for the short term right now, but they're bullish in the long term because they are clearly stating that people are recognizing the fact that this is one of the best opportunities to take advantage of the cheaper real estate investment trusts for the long term, right? So clearly that's the market sentiment right now. If you want to learn more about what people are thinking, you can go to the reaction section or conversation section on Yahoo Finance and read more about it. You can also go to Twitter and search for $REI.UN.TO. You'll be able to see a lot of sentiments. Before making this video, when I looked at the Twitter comments and the sentiments, it seems like a lot of people are clearly bearish in the short term but bullish in the long term, which is the same kind of sentiment that you would see in Twitter as well, right? So going to statistics, if you see some of the numbers, you can basically see that the market cap intraday is about $5.77 billion. The enterprise value is $12.61 billion, and trailing PE is 9.98, and forward PE is 10.79. So clearly the forward PE is expected to grow compared to the current PE values, and the PEG ratio is not really available at the time. The price per sales is 4.86, and the price to book value is 0.73. Clearly, some of the metrics is stating that this stock is quite undervalued. We'll go through that in a few seconds now. But if you see here, the most important numbers here is under the stock price history in trading information, you can see that the 52-week change has been negative 15.49%. So clearly, the stock has performed little poorly in the past 52 weeks. It's kind of gone down 15.49%, clearly due to the current market conditions and the high interest rate hike that's expected for the central bank. So that's clearly having an effect on the stock's price in the past 52 week. And S&P 500 52-week change compared to S&P 500, the stock has done even more poorly, reaching negative 16.88%. So clearly all the comparisons with S&P 500 and even the 52-week performance of the stock has been poor, which is not really surprising, and this is the best reason why you need to focus on buying the stock, because now the stock is doing a little bit more poorly in the current scenario. This will give you a best opportunity to buy it at a significant discount, right? But again, not financial advice, that's my personal opinion. The 52-week high and the 52-week low has been mentioned here as well. You can also go through the average volume in the past 3 months has been $763,000. The average volume in the past 10 days has increased. So clearly the trading volume has increased, but the the overall price sentiment has decreased, and therefore people are actually dumping this stock in the market in the anticipation of buying it back at a later price point due to the market sentiment, right? And if we scroll further below, they have a float of $302.48 million. Percentage held by investors is only 0.24%, which is pretty good, and percentage held by institutions is 30.45%, not really surprising. And you can see the other important ratios here for your reference. Dividends wise, obviously it's not dividends, even though it's called dividends, it's distribution. Forward annual dividend rate is 1.02, and the forward annual dividend yield is 5.47%, so really good value. When the stock goes to $15 per stock, then the yield will increase, because the yield won't really change. It's just that you'll be able to buy more stocks when it's cheaper, which will give you an illusion of getting a higher yield, right? So as the stock goes down, you will be able to get it at a you will be able to get a good dividend yield from the stock, right? So the trailing annual dividend rate is 0.99. The trailing annual dividend yield is 5.15. 5-year average dividend yield has been 6.13%, is pretty good, and the payout ratio is only a low value of 52.67%. So clearly they are paying out only 52% of their profits for distributions, which means they still have a decent chunk of money that they can use to buy more properties or even grow their own portfolios, right? So that's pretty good. The dividend date is October 7th, 2022, so that's the next dividend date. And the ex-dividend date, if you need to get paid on October 7th, 2022, you need to have at least one share of this particular stock by September 28th of 2022, right? So that's something that you need to have in mind. Last split factor, so they did have a last split of their dividend in a 2:1 ratio, which happened in February 10th of 1998. So clearly it happened a very far a while back compared to the recent times, and therefore this is not really a significant information for you to know, right? So if you scroll further below, the fiscal year of this company ended on 31st of December 2021, and the most recent quarter was obviously June of 30th, 2022. The profit margin is 47.37%, so clearly they are making profits, and the profit margin is close to 50%. The operating margin is 56.11%. Return on assets is 2.82%. Return on equity is 7.40%. The revenue is $1.23 billion. So clearly this is the revenue information that you need to know. They are a very highly profitable company, and they are making sufficient revenue through their rental properties, right? The gross profit is $737.12 million clearly, and the EBITDA is $696.64 million. And all the other information you can go through here. So total cash that they have on the balance sheet is $72.52 million. So clearly they have enough cash to acquire more properties and to grow. Operating cash flow is $507.06 million, and the leverage free cash flow is $432.92 million, right? So clearly they are a very big company with a lot of revenue, as well as a good payout ratio for dividends, and some other information that you can go through it yourself, right? So other companies that people compare this stock with is Smart Centers Real Estate Investment Trust, which is also another popular name in the Canadian market. H&R Real Estate Investment Trust. They're comparing this with Enbridge, Fortis, and Algonquin Power. So these are all other high quality stocks we'll cover in our channel in the future, right? So when you go back to the historical data, this will provide you with the daily price of opening, closing, as well as the highs and lows and the average adjusted volume for on a daily basis. So you can see that since the past 3 days, the volume has considerably increased. This is because people are coming to sell their stocks, unfortunately, and that's why you are seeing that the closing price has also considerably gone down on a daily basis, right? When it comes to profiles, you already seen this page. You can go to their website for more information. They currently employ about 582 employees across Canada, which is pretty good. These are the key executives. Mr. Jonathan Gitlin, who's the president, CEO, and additional trustee, is the main executive person of Riocan, and you can see his pay as well as the year he's born, along with the pay and other information of other executives of the company, right? So going to financials, so this will tell you the annual and quarterly revenue as well as the breakdown profits. We already kind of briefly touched upon this. I'm not going to go through this in much detail, but this information is available here for you guys to go through, right? Let's go to analysis. So analysis will tell us what's the long-term and short-term prediction for this stock. You can clearly see that there's not a lot of analytics information available here, but the overall sentiment is that this is a good stock to hold for the long term, even though it's surprising that they don't really have any analysts estimate on Yahoo Finance, which is quite weird. So the options information is not really relevant. So let's go to the holders section, which breaks down the people who hold the stock based on institutions. So if you see the major holders of the stock, 0.24% is held by insiders, 30.45% by institutions, and 30.53% by of the float is held by institutions as well, and 232 number of institutions that are holding the shares of Riocan, right? Top institutional holders, Vanguard International Stock Index holds about 1.35% of all the stocks of Riocan. Vanguard Tax Managed Fund holds 0.74%. DWS Real Assets Fund holds 0.59%, and the rest of them hold less than 0.57% of the shares, right? So clearly they are being held by several index funds, especially from Vanguard International. And if you scroll further below, you can see, I think that's all the information is available here. For now, you can only find this information, but for other stocks, you usually are able to find, top institutions as well as top mutual funds that hold a particular share. It seems like mutual funds don't really hold stocks of Riocan, right? So these are the numbers, and these are the players who hold the stocks of Riocan. So sustainability wise, which is the final section, sustainability wise, you can see that there's a ESG risk score of 13th, which is the 7th percentile, which is low, which is a good thing. It shows that this stock is a highly environmentally sustainable stock. There's not a lot of damage or harm done to the environment, so that's pretty good. The environmental risk score is 2.9, social risk score is 4.9, and governance risk score is 5.4. So clearly there is no concern with the controversy, and that's why there's literally zero, like none, right? When it comes to controversy, which is exactly what we need to see. And they have product involvement areas. None of the product that they sell, which is obviously the real estate portfolios that they have, has anything to do with alcoholic beverages, adult entertainment, gambling, tobacco products, and none of these are applicable to this stock, so that's pretty good as well, right? So going to the price summary page for the stock, as you can clearly see, it's trading at 1866. And if you look at the long-term chart, you can see that the stock has had some ups and downs. In the recent times, the stock did crash due to the COVID-19 pandemic situation, but it has managed to recover. And now, due to the interest rate scenario that we are seeing right now, the stock is going downwards, and currently it's at 1866. It's expected to go as low as $15 or maybe $14 if we are lucky, right? So as you can see, the stock has had multiple issues in the past. During recessions, the stock easily collapses. It reached a low of about $12.16 during the 2008 crisis, and then managed to recover, reached a price of about $29.51 before getting a small breather here and there. It did move sideways for pretty much a whole 5 years or so, making peaks and then crashing down. And then during the COVID-19 pandemic, it kind of jumped off a cliff from $27.16 to a price of about $14.38. And then after that, it soon quickly recovered, reaching relative highs of $25, and now is coming back again, right? So people are speculating that this stock could go as low as $15 to $14 per stock. During the COVID era, during the COVID time when the stock kind of plummeted, that's the same price that it's expected to reach in a few months. So pay close attention to that, right? So if you're trying to buy the stock, which is a very good quality stock for the long term, buying it at a discounted price would always help, because you will get that really high dividend yield that you can lock in, right? So I suggest you to start dollar cost averaging in at this price point, because you could buy it at $18, $17, $16, $15, and then maybe at $14, and then it will start going upwards, which will give you some really good dividend yield or distribution yield, and then you'll be able to lock in some really good long-term gains when the stock goes back to $25 to $26 in the next few years, right? So clearly this is a good stock to hold. It provides a really good picture of how the real estate markets, especially in Canada, works, and what are the things that you need to pay attention to. A lot of people, like smart investors, definitely will hold a lot of REITs on their portfolio, because it's definitely easy money to make on a monthly basis. You literally get rent through distributions directly paid to your account, so there's literally nothing you have to do. You just need to buy and hold, right? Compared to other stocks that pay a quarterly dividend, this stock pays monthly dividends, which is pretty great, and they have increased their dividends in the past, so they may increase their dividend in the future as well, because currently they are increasing the rents everywhere, so they will still be able to meet their obligation to their investors, right? For the long term, I can easily see the stock reaching as high as $25 to $27 in the next 5 years from now, and maybe even reaching as high as $30 in the next 10 years from now, and therefore you will be able to buy a stock at a really good discount at this price point, and you'll be able to not only earn distributions as long as you hold the stock, but you also get a good dividend increase every year after year, right? So that's definitely possible with Riocan. So that's basically my final verdict, right? It's a really good stock to hold, and for people who are trying to get exposure outside of the US or their own country, they can try to look into buying the stock from the stock market to get exposure to the Canadian real estate environment, right? So again, that's just my opinion, guys, not financial advice. Please do your own research before you put your money onto this stock, right? Again, remember, guys, you guys are not regular investors, you guys are brutal investors, so stay brutal. Thank you very much for watching my video, guys. If you like my video, please hit the like button and subscribe for more videos. See you in my next video. Bye.